The situation is that every country in the world is in debt. The numbers are mind-boggling. The debt of the United States alone has exceeded $38 trillion, the highest level in its history. The European Union is about $14 trillion in debt, and Japan is $9 trillion in debt. But it is not only the debt of these big economies that is astonishing. Even oil-rich countries such as Saudi Arabia and huge manufacturing centers such as Germany and China are in debt. So if everyone is in debt, who owes this money? Who stands on the other side of this global equation? This is what we call the Moai Code. Welcome to the Moai Code. Contrary to popular belief, debt is not just a burden we need to get rid of. The modern world is built on it. Every war, every economic growth, every crisis, all rest on that invisible structure, a system of you owe me money. If you follow this cycle back far enough, you are confronted with an uncomfortable truth. The world owes no one. It owes itself. But don't be fooled. This doesn't mean that everyone gets a fair shake. Today, the world is saddled with a total debt of $315 trillion. That's 3 times the size of the entire world economy. So how did we get to this unimaginable situation? Forget credit cards, Wall Street, or the digital age. The answer lies in a much older place, on the battlefields. Because that's where debt was born, where it sprouted. It was war. The concept of the national debt was not born on Wall Street. It was literally born on the battlefield. It was 1694. England was in the middle of a bitter war with France. But the treasury was empty, and the gold had run out. The king was looking for a solution and found it in the merchants. The king asked them for money, and in return promised permanent interest payments guaranteed by future taxes. And the merchants financed the kingdom. The Bank of England was soon established to manage this new financial order. Thus, the foundations of the modern financial world were laid. It was a revolution in the truest sense of the word. Why? Because now the state had the power to spend money it did not have. And what did the lenders gain? Something priceless, a government-guaranteed promise. This promise could be bought, sold, and exchanged on the market. This is the birth of the bond and the core of the modern economy. Of course, this model spread rapidly. First, France imitated this system. The Netherlands perfected it. America, after its independence, used this system in 2 critical areas: to finance its revolution and to expand westward. Debt is no longer a weakness. On the contrary, it became a symbol of credibility. Put simply, a state that could borrow could dominate. There was a time in history when empires conquered territory in search of gold. But now the new rule was this: they issued bonds to collect interest. The battlefields were completely replaced by balance sheets. Now, fast forward 3 centuries, debt has become the world's most powerful export product. The numbers are incredible. America's debt is $38 trillion. Japan's debt is over $9 trillion. And perhaps the most striking data, worldwide debt increases by $1 trillion every 100 days. We are gearing up. Smell your coffee and keep listening. Every country is borrowing. Every bank lends. And every citizen, through the taxes they pay, the savings and pension funds they accumulate, becomes both a debtor and a creditor. But the question is, who really holds the other end of this string? Let's start with America. Half of this $38 trillion is owed to investors, not to the government's own institutions. About 2/3 of these investors are American institutions, banks, pension funds, mutual funds, insurance companies, and, of course, the Federal Reserve. The remaining third, about $9 trillion, is held by foreign investors. Japan tops the list, holding $1 trillion worth of American bonds. China follows with around $800 billion, then Britain, Luxembourg, and Belgium. So when it is said that America owes China, it is not entirely wrong, but it is only 2% of the total. The truth is, most of America's debt is to itself. If you're saying, how come? You'll understand now. The cycle works like this. The Treasury issues bonds, banks and funds buy them, the Federal Reserve buys back these bonds from time to time so that new dollars are created. Americans pay taxes, and these taxes finance the interest on the bonds. That interest income goes back into the investment and retirement accounts of Americans. It's a marvelous cycle, a mirror economy. The debt is real, but the creditor is the reflection in that mirror. And this is not unique to America. It is a global system. Japan lends to America. America lends to Europe through the IMF. Europe lends to developing countries through the World Bank. Those countries, in turn, return the same money by holding their foreign exchange reserves in Western bonds. In short, we have a gigantic chain of promissory notes in front of us. In this chain, each promise is actually collateralized by another promise. This game is like a huge poker table where everyone is borrowing from everyone else all the time. And the only simple rule at the table is that nobody moves. So who keeps this mechanism going? Behind every government bond is an invisible empire that manages trillions of dollars. This giant network consists of hedge funds, pension funds, sovereign wealth funds, and, of course, central banks. They are the real credit authorities. They determine who can borrow cheaply and who has to pay much more to survive. What happens if trust in this structure is shaken? The consequences are devastating. Currencies collapse, governments topple, and economies are rewritten overnight. Remember, democracy decides who runs the country. Markets, however, decide who will survive. I am waiting for you to assimilate this sentence. Okay, go ahead. At the top of this financial pyramid sit the high priests of modern finance, central banks. They don't just manage debt, they also create it. Whenever the US Federal Reserve, Fed, or the European Central Bank buys a government bond, it creates new money in return. In this way, the debt of one balance sheet becomes the asset of another. It is precisely through debt that the system is supplied with oxygen. Every dollar, every euro, every yen in circulation is someone's trace of, you owe me money. There is no such thing as debt-free money. On every coin, every paper note, every digital number is engraved an invisible promise that one day, somewhere, someone will have to pay. This cycle has survived for decades because of one thing: trust. As long as investors believe that governments will continue to pay interest, the machine keeps turning, even if the principal is never paid. But when that faith disappears, when that trust wanes, that's when the system starts to suffocate. We have seen this many times before. Remember Greece, 2010. The debt suddenly became unpayable, bond yields skyrocketed. Who stepped in? The IMF and the European Central Bank. A rescue package came, yes, but what did they get in return? Austerity, unemployment, and a lost generation. Argentina? It defaulted repeatedly. Debt has become a national curse. More recently, when Sri Lanka ran out of foreign currency to repay its loans, what was the result? Chaos erupted across the country. When the illusion breaks, that's when the creditors are unmasked. Who will be revealed? The IMF, the credit rating agencies, and the anonymous bondholders holding nations by the throat. But do you know what is most striking? Even after the collapse, the same cycle starts all over again. New loans immediately replace the old ones. What happens to the old debts? They are restructured, renamed, resold. Because debt in the 21st century is never designed to be paid off. It is only designed to be constantly rolled over. Governments today have no plans to actually pay off their debts. Not now, not in the future. And this is not a conspiracy theory. This is the official policy of the financial world. When you or I borrow money, we're expected to pay the principal. But governments? They play a different game. They see debt as an ever-renewing subscription. They issue new ones to pay off old debts. Economists call this refinancing. If you need to ask for a new loan from a friend you have borrowed from and not repaid, tell him that you want to refinance. It will look more ethical. Forget that. I just gave this little piece of advice, and let's move on to the last striking part. Interest is no longer a byproduct. It has become the main product. We call it the rent of stability. And the global economy is now completely dependent on this rent. The mechanism that sustains the system is very simple. Just like a shark has to keep swimming to breathe, the system has to keep borrowing to survive. There is no debt-free ending in this game. There's only a relentless momentum. Let's look at the big players. The United States will never pay off its debt in full. What is it going to do? It will roll it over forever. Japan has been practicing the system for decades. The country's debt is over 250% of its GDP. But interestingly, interest rates are still close to zero. Why is that? This is the key point. Because investors are not waiting for the money to be repaid. They only expect the debt to be renewed. That's why government debt is not a burden for investors. On the contrary, it is the safest collateral in the world. Remember, the U.S. Treasury bond is not just a piece of paper. It is the cornerstone of the global financial system. Why? Because pension funds hold it. Banks use it as collateral, and central banks treat it as direct money. But what if suddenly what happened? What if Washington tried to pay off all its debts overnight? The result would be catastrophic. The financial system would collapse. Banks and funds would lose their safest assets overnight. The supply of dollars would fall sharply, and a deflationary collapse would inevitably ensue. To pay off the debt would be to destroy the oxygen that sustains the system. That is precisely why governments do the opposite. They issue more debt, but this is not a random act. It is done with a certain rhythm. Debt has become the heartbeat of capitalism. Every salary, every loan, every pension fund in the world beats to this rhythm. So when politicians go on TV and say, we're going to balance the budget, know that they are actually selling us an illusion. The real goal is not to end the debt. The real goal is to maintain the credibility and convertibility of that debt. As long as people believe the numbers, the game goes on. But when that belief is shaken, confidence collapses, interest rates skyrocket, and the illusion is shattered. This is the hidden truth of modern finance. The plan was not to pay off the debt. The plan was to make the world believe that the debt would one day be paid. As the saying goes, we owe it to ourselves is only half true. Because interest payments are not evenly distributed in society, they flow upwards. from workers and taxpayers to the institutions and investors who hold the debt. Debt is not just a figure between countries, it is a transmission. Line between classes. It sucks wealth from below and accumulates it above. This is why global inequality and global debt always increase together like twin shadows. The system rewards those who own the debt and punishes those who pay. Sound familiar? It is the same cycle from home to country, from country to the entire planet. Creditors are not villains. Debtors are not victims. They are both stuck inside the same machine. The problem starts when the engine runs out of fuel, when new debts become insufficient to cover promises already made. That is when the question, who is the creditor, ceases to be abstract and becomes personal. Because at the top of this global pyramid, there is no single face to blame. Not China, not Wall Street, not the IMF. Who is there? All of them and us. The modern financial system has done the impossible. It has monetized debt itself. This is how this system breathes. Governments issue debt. Banks multiply it, investors buy and sell it, and we citizens become dependent on it. The result? The line between debtor and creditor is no longer recognizable. Look at history. Debt once meant bondage. Today, debt is the basic rule of the financial world. Debt now means balance. But when that balance is broken, when that trust is broken, the illusion ends. And then we all remember, debt is a promise that cannot be kept forever. History changes, systems collapse, but empires built on knowledge survive. Moai, the stone wisdom that has stood tall for 1,500 years. We are like them, patient, strong, unshakable. If you want to build your own financial empire, subscribe to and become a part of the Moai marching into the future.